We're coming back down into longs from lows again now, but it's a full 50% retracement long from our lows last week, Wednesday, to our most recent highs. And why this is important is because the dollar is creating an environment here where it's going negative in the 15-day on the S&P, the NASDAQ, and the Russell. And so you see those negative correlations coming out in our market. This dollar weakness trade, the pullbacks that you're witnessing right now after hitting our targets, are creating a rally. It's a short covering squeeze on the negative correlations. And the dollar strength trade lifting off from these levels can send us right back down inside of, it looks like the indices again are starting to pick up inside of that negative correlation over the 30-day. There's of course the currencies, gold and silver. Even Bitcoin is starting to get a negative correlation over the 15-day period. So the dollar strength trade that we're inside of right now does not do the broad markets any favors at this point. It is creating a headwind and a continuation of weakness until when we get back down to that support level. There's a whole other leg of a headwind from the dollar that we're going to experience. Meanwhile, look at Bank. Bank is inside of an all the way halfway back short from highs to lows. In fact, it's defending a morning highs to lows. What are these two leading indicators so far tell us about? What do they tell us about the broad markets? That they're in a downtrend. What about the VIX? What is the VIX telling us? Well, the VIX is squeezing right up into a massive resistance level. And again, today is the last day of the February contract. And it very much looks like a double top type situation. You certainly could make a case when you're looking at the VIX continuous contract that we're squeezing right into a daily short. The only issue is that in the intraday timeframes, when you start going down to smaller timeframes, we have not confirmed a trend break inside of what's important is the new VIX contract, VXH26. In fact, we've run right to the line in the sand. And I mean right to the line in the sand. The uptrend that we've been inside of since last week, Monday, this is what created all the swing highs, it running right to its 61.8% line. We could even make a case here that last week's short setup on the indices, the equivalent of that, the long from lows on the VIX, never completed its target and still has an original support level. Now, as we were going into our morning, all we were anticipating was that these 2045s, if they held, would continue the indices going straight down in a series of short setups. So far, they've defended. And if we break them, yes, there is a counter trend long from lows and an VIX short from highs that we're going to have to pay very close attention to. But so far, we have not broken trend. It might lead to one as we're coming out of the daily doldrums here, but so far, no break. And then we go to the indices. And this is what we were, as we were going into our morning time frames here. We've had this incredible weakness trade since coming out of last week. And this is an hourly chart here. All of these little swing highs that you see up here were a VIX bullish above line in the sand. How many are there so far? We're at number 6. No break. Now, it very much looks like a gigantic inverted head and shoulders pattern. And absolutely. This stream continues at eMoneyAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.